able to access all the videos? The online ninjas, are they able to access all the videos in the learning management system? Great. Sawa. So what is capital rationing? Of course, capital has never been enough. Yeah, capital is normally very, very scarce. So you could be having, like, say, 100 million as a company. But you see, you can't just go investing this 100 million, all of it. We should preserve something for the future because of what are the rainy days. So then this capital has to be budgeted for and, if possible, rationed. So in this case here, we put targets and say we can't use more than 80%. 80%. So in this case here, we put some brakes on ourselves. So tell us there that capital rationing is limiting investment, limiting investment in projects, limiting investment in projects due to budget constraints, limiting investment in projects due to budget constraints, even if they are profitable. Limiting investment in projects due to budget constraints, even if they are profitable. Full stop. Types of capital rationing. Types of capital rationing, there are normally two. We have hard capital rationing. So number one, we have hard capital rationing. Hard capital rationing. Yeah. Whenever you hear of hard, these are normally caused by external factors. Yeah. Banks are not able to finance us, etc. So caused by external limits. External limits, e.g., no funding, yeah, from banks, investors are outside there, etc. So automatically that will be hard capital rationing. There is nothing you can do to flex this as an organization. You don't have a loan. That is it. You must learn how to live with it. And then, of course, now you do your financing decisions optimally. And then we have now the soft capital rationing. Soft capital rationing. So soft capital rationing caused by internal decisions. Caused by internal decisions. Caused by internal decisions, e.g., budgeting policy, comma, risk controls, etc. Risk controls, etc. Now, for us to be able to appreciate what we are talking about this evening, ladies and gentlemen, I would want us to immediately look at our past papers. And the question that I would want us to do today, yeah, I hope now they have past papers, either soft or a hard copy. Yeah, so I would want us to look at August 2022, question number 4C. August 2022, question number 4 cow. August 2022, question number 4 cow. August 2022, question number 4 cow. Yeah, August 2022, question number 4 cow. Very, very popular in your exams, this area. And it's an area that I can't really just point a video to you and then expect you to understand. This, I have to do it in class. Do you have a past paper? Maybe they can give you a link because everybody should be having those papers. August 2022, question number 4C. The online students, have you been able to get access to this question? Online students, have you been able to access the question? Online students, have you been able to access the question? Yes, at least Anne-Marie has been able to do it. Yeah, this is advanced financial management. I know linear programming at times can confuse you. People may think it's QA. Actually, I should write here AFM so that ninjas in this case here won't be confused, eh? Advanced AFM, capital rationing, advanced AFM. Check your past papers, you'll be able to see that question. It's called 𝐂𝐸 Limited. So I read, 𝐂𝐸 Limited is considering investing in two capital investment projects, X and Y. The project's cash flows are provided as shown below. So we have year 0 to year 3, project X and project Y. The funds available for investment in both projects are restricted as follows. Year 0, we only have 100,000 to invest. Year 1, we have 80,000. Year 2, we have how much? 60,000. Additional information, none of the projects will delay, that is both investments, will start in year 0. Number 2, the funds not utilized in 1 year shall not be available for investment in the subsequent years. Both projects are divisible, that is, a project can be undertaken in part or in a whole. The cost of capital is 13%. Formulate a linear programming model to solve the problem. Step number 1, whenever they ask us to formulate a linear programming model, we shall first compute net present value for each given project. So first of all, we get net present value of X, and then we get net present value of Y because there are only 2 projects. So is there somebody who can do this net present value of X? So we have 2 projects, and the first step is to give them the NPV of the project. So we start with the NPV of project X, 3 marks. So NPV of project X, I can see the time. Yeah, I have 0, 1, 2, 3. I can see the cash flows. I can see the cash flows. So the cash flows I can see. If possible, let's cut those many zeros. Let's just work with 40. And then our figures will be in shillings millions. Because currently the way they are, they're in thousands. So if again we chop this with 3 more zeros, then our figures will be in millions. So project X, I can see times 0, I'm investing 40. It's quite a very useless project because year 1 is not going to give me any money. Still year 1, I can see myself pumping in more money, 80. Yeah, year 2, I still pump 120. Yeah, but year 3 now, I get a lump sum manna from heaven, 400. And that now happens to be the last year. So now, my good ninjas, great students of mine, what do I need to do to be able to get net present value? PV, yes. So we need to discount this, isn't it? So in this case here, for discounting this, some student has told me, Mwalimu, this cannot be PV. These are not annuities, isn't it? You can see they are fluctuating. And if they are fluctuating, we use PV because in this case here, cash flows, because cash flows are fluctuating. Because cash flows are fluctuating. They are fluctuating. Cash flows are fluctuating here. They're different, right? And is there anybody who is able to remember the formula of PV? Yeah, great. So they know that PV equals who? 1 plus who? R raised to negative what here? Negative n. The formula for getting present value, interest factor, is 1 plus R. But you guys haven't yet seen the value of R. In this question, R is the required return. R is the required return or the cost of capital. They'll tell you that the investors in this scenario need 13%. Somebody is telling me 13%. Yeah, so therefore R is 13%. So then this one here will be 1.13 raised to negative n. 1.13 because you see R is 0.13. So therefore, my PV, of course, in your exam, you'll start using your tables often. But for now, I want you to get a firm grounding of these concepts. So in this case here, the first one, it will be 1.13 raised to negative. What is our n here? The time period is 0. So you keep on doing that. You keep on doing that. You keep on doing this. Yeah. And then remember, how many decimal places are we talking about always in PV? 4. There are 4. There are 4. Therefore, so please go ahead and give me the numbers. And if you feel that I'm a bit fast, always tell me, Mwalimu, there you're a bit fast. All right. So at least the formula of PVF, that is not a tough one. That is a very easy one. Yeah. So in this case here, Lincoln Mwangi, my friend, has given me a figure of 1. He has given me 0.88. Is it 50? Yeah, great. We shall always use our calculators. We shall always use our calculators. If you don't know how to raise, I can come to where you are and then I'll be able to show you where. Yeah, Lincoln is telling me that if I take 1.1, there is this raised function in your calculator. If I take 1.13 raised to negative 2, this ninja is getting 0.6931, this one here. And then this one here is 0.7. Talk to me. This third one, the third figure is supposed to be 0.7831. So now having gotten these PVs, now you can come and give me the discounted cash flows. Give me the discounted cash flows. You can write that in full if this is your first time to encounter this. You give me discounted cash flows. So discounted cash flows, my friends, what do? We take the cash flows that we have, we multiply them by PVs. So like this will be minus 40 times 1, which gives me minus 40. This will be minus 80 times this number. Please give me the answers. Please give me the answers. 70.8, negative, isn't it? Yeah, thank you so much. And then the third one, it will be minus 120 times 0.7831. Negative 93.7.972. Thank you so much. Thank you so much. Thank you, Lincoln. And then we have the last one, which will be the only positive one. It will be 400 times 0.6931. 277.22. Thank you so much. 0.22, right? 22 or 24? They're saying 24. 24. I'm the one who had it wrongly. So after that, now that these are discounted cash flows, we shall add all of them. We shall add all of them because now they belong to the same mother, equivalent. Today's figures, they are discounted. Now we can add them. And whatever answer we shall get, what name shall we give to the answer we get? The answer we get, we shall call it net present value because you see it's net of the initial outlay. It's net of the initial outlay. It is net of the initial outlay. So I'll come here and write net present value. So how much are we getting as our net present value, if you don't mind? So according to 72.468, 72.468, yeah, 72.468. Anytime students write up to here, I'm quite aware of the mark they will always lose, the free mark. This being positive, you say, just in brackets here, you say that this project is viable, yeah, because NPV is positive. NPV is positive. So unfortunately, many students upon reaching here, they start clapping. They forget that they have just started the question. That is NPV of one project. So go ahead and give us NPV of the other projects. And that is why I always tell students not to call me after exams, because many call me after exams. They tell me, Mwalimu, ninja, tumepita ikija exam, opposite. Why? Because they are doing things partially. They are doing things partially. So then I'll write there, NPV of project what here, somebody? Why? I should have not rubbed something there. NPV of project Y. NPV of project Y. So this is NPV of project Y, like that. So we have 0, 1, 2, 3. We have our normal cash flows. Our normal cash flows. So for project Y, I can see negative 80. Remember, our figures are in thousands. I can see negative 40. I can see a dash there, which is a 0. And then lastly, I can see 200 what here, somebody? I can see 240. 40. You see, the PVs will not change because 13% is applicable to both projects. In some cases, they will tell you that the projects have a different required returns. So here they are not changing. And fortunately, I have all of them PV. This one is supposed to be 1. Fortunately, I have all of them. Yeah, great. Fortunately, I have all of them. So then I would expect you guys, after you write nicely, to give me discounted cash flows for this project Y. Give me the discounted cash flows for this project Y. So according to LinkedIn, the first one is minus 80. The first one is minus 80. The first one is minus 80. How about the second one? Physical students, you should be able to respond and help me. Because if you keep quiet, who will help me? The second one, negative 35.4. Thank you so much. And the third one is 0. Mwalimu, also don't be lazy. The third one, you can see it by yourself. Thank you. And then the fourth one, according to LinkedIn, it is 166.344. Thank you so much. So come here and add up everything. Because now we have discounted cash flows. So remember, when you are adding, this is minus 80 minus 35.4 plus 166.344. How much are we getting there? 50.944, isn't it? I've written there in brackets is viable. That can give you 1 mark, which can take you to places that you've never seen before. Like where? BDA level. Yeah, BDA level. So that is step number 1. You get NPV of the projects that have been provided. If there are 3, you do the same for the third one. So having gotten that, step number 2, you do an LP formulation. So step 2, we formulate the linear programming. So step number 2, LP formulation. LP formulation. Is there any student who could be remembering how linear programming equations were looking like when you guys were doing QA? What should be the top line? Top equation. Top equation. Umejaribu sana Lincoln amesema ni maximize. So the objective function here should be to maximize Z. Thank you very much. So in this case here, objective function is to maximize Z. And remember, for us in financial management, our Z will always be total net present value. Total net present value. Total net present value. Remember, ladies and gentlemen, we have 2 projects. Which projects are these? We have project X and project Y. So in this case here, we start by saying the quantity. We let the quantity of this X be X and the quantity of Y be what here, somebody? Be Y. Yeah, remember the names are X and Y. You can use quantities. You know, in linear programming, we don't know the quantities. Yeah, so we start off by writing the net present value. Net present value. So net present value for X, ladies and gentlemen, you guys had given me this figure, but I wrapped it. Net present value for X, you had given me a figure, but I wrapped it. 72.468. This one here is 50.944. Now, please listen and listen to me very well. This quantity for us in finance, it is the fraction of the project. Fraction or proportion. So if you do a whole project of X, you get what NPV? 72.468. If you do a half, then you'll be able to get NPV of a half times that. Now that you're taking X, then what will be that? Look at this. So the objective function is to maximize the total net present value, which will be 72.468X plus what here, somebody? 50.944Y. Like that. Because you see, we are implementing the two projects. What we are not sure of is whether we shall implement them wholly or partially. Is whether we shall implement them wholly or partially. Because they have told us here that the projects are divisible. But we don't know whether we are going to afford both of them fully because of capital limitations. So the objective function is to maximize the total net present value. Yeah, if we invest in fully X, then we get this. But you see, we are taking just a proportion. So we take this times this plus this times this. Now from there, you go ahead and they give us the capital constraints. Capital constraints. So give us the capital constraints. So give us here the capital constraints. So these capital constraints, there are three. There are three. So remember, we have here X and we have Y. So look at note number, actually it's not a note, just the table, second table. The table before additional information. The table before additional information. Yeah, so they have told us there, the funds available for investment in both projects are restricted as follows. How much do we have available in year 0? 100, isn't it? And then in year 0, you can see in this case here up there from table 1. Table 1, year 0, X needs how much? No, they're not saying table 1. X needs 40, isn't it? So at year 0, X needs 40. And then Y needs how much at table 1, 80. 80. And then you have got how much in total here to invest in year 0? 120 or 100? 100. Don't add. So this is maximum available. Maximum available is 100. Maximum available is 100 at time 0. And yet, if I invest in X fully, I need 40. If I invest in Y fully, I need 80. So I can see there is a restriction. Yeah, I can't surpass what here? 100. But how do I write this constraint now? So it means that I have to take a fraction of X and a fraction of Y. So remember, we already have our fractions. So we'll come and say capital constraints. Constraint number 1, 40X plus what here, somebody? 80Y should it be? 100 exactly. No, good try, but wrong. Should be less or equal. Yeah, should be less or equal to 100. Because you see, if you decide to use more than 100, then you're a thief. Because you can't use what you don't have. The maximum you have is 100. So it is either you use that exactly and finish it, or you use what here, somebody? Less. We use less. Can I give you 1 minute to try the second constraint coming from year 1? Given that they have given you the maximum for year 1 that is available, just try. Even if you don't get it right, so what? This is called adult education. There is nobody who is a fool. Only that we have challenges of being very busy outside there. Yeah. So many things beckoning for our attention. Yeah, a very good student is asking there, should we assume the negative and forget about it? Yes, because here we are looking at how much are we going to invest. So in the constraints, you can never have a negative. Thank you for asking that question. In the constraints, we shall never have a negative. In the constraints, we shall never have a negative. So let me see whether there is any single ninja that will be able to give us constraint number 2 coming from restriction in year 1. Do you have the equation already? Number 2. 80x plus 40y is less or equal to what here? 80. 80. And I can see in this case here also the online students are really following. They are really following. And then now we have the, okay, before I go to the third one, remember year 1. If you look at table 1, I can see in this case here, X wants to gobble 80. 80. X wants to gobble 80. And the Y in this case here will be taking how much? 40. And yet from table 2, we can see the maximum amount available in millions. Remember, we chopped 3 extra zeros. In millions, it is 80. So then make this an equation. So it will be 80x plus 40y is less or equal to what here, somebody? 18. And then now the third one, you guys should be able to give me the third one very, very fast. 120x, plus 0y. And you see, I can't write 0y, right? Because 0y is as good as what here? 0, isn't it? So then it should be 120 less or equal to what here? 60. But I think for your revision, you can still write it as 0y, right? For your revision, you can write 0y, but ensure that you cancel it because 0 times y is 0. Yeah. Is there any other constraint you think we should be able to include here? Any other constraint? You guys who passed QA round one term, you never failed in QA. That's why you are here. Any other constraint you can remember? There is one constraint we used to call non-negativity, that we don't entertain negatives in linear programming. Yeah, so we call it non-negativity. So that x, comma y, all of them in this case here will be greater or equal to what here? Somebody? To 0. They can never. It's not possible for x to be negative. That you invest in a negative project is not possible. It is either you invest in a 0 or more, but you can never invest in a negative project. So this one here, we call it non-negativity, and it's normally a free mark constraint. Most students who are very good in exam techniques, who are not very good now in understanding some of these things, what they will do after they write the objective function, they'll always start with a negative, because in a negative, you don't need to think at all, isn't it? But the point that I'm trying to put home is that we shall never forget non-negativity. Yeah, greater or equal to 0. And by the way, when this thing is written like this, x like this, what does this mean? You can see it is becoming smaller towards. So it means x is less. Or on the other side, you can see it is becoming bigger towards y. So y is bigger than what? X always. So whenever you see like now this means that this side is less. Because I don't want to, do like what I normally see some high schoolers doing. At times I volunteer to teach in high school. And then you'll get a student saying, here, this is great. They use hands, this is greater. And then the other one is what? Yeah, did you use that symbol in high school? No, you don't want that. Now you're big people. Whenever you see this thing condescending towards x, you know x is smaller. So then you have been able to do a linear programming formulation. Look at number 1. Number 1, they wanted us to formulate a linear programming model to solve the problem. How many marks are they giving us there? 4 marks, 4 marks. So in this case here, of course, they'll come and mark 1, 2, 3, 4, 5, and then they'll say any 4 equals 4. Any 4. Yeah, so easy marks. So you have in this case here, you have 4 marks that can easily make you see places that you've never seen before. I was doing a big blunder here. Yeah. All right. Now, so we have done number 1. So let's do number 2 now. So now we are doing number 2. Using the graphical approach, solve the linear programming model and hence determine the proportion of each project to be undertaken to maximize net present value. So now they want us to draw a graph. So how do we draw this graph? Sorry, you have to read for me this. It was objective function here was to maximize z, which was equal to what, please? The objective function, just the NPVs, if you remember them. 72 something. 0.46. 8x plus 944y. And then we went to what we called capital constraints. So these capital constraints, ladies and gentlemen, we have here number 1. The first one ilikuwa namna gani? 40x plus 80y, 100. And then we had number 2. Thank you so much. Now I want to draw a graph. So in graphing, we only graph constraints. We don't draw the objective function. So we are going to draw, in this case here, the constraints here. Remember, we are calling this topic linear programming. How many points do we need to be able to draw a straight line? 10, No, we need how many points? 2. So whenever in this case you want to draw any straight line, you need 2 points. So then, ladies and gentlemen, we shall go to each constraint one at a time, looking for the 2 points. Let's go to our constraints. We look for these 2 points one at a time. And how do we get them? Very easy. We start by asking ourselves, when x equals 0, what will be the value of y from constraint number 1? If x was to be 0, this dies. So it means 80y will be equal to 100. Therefore, y alone will be 100 divided by what here, somebody? 80. When x is 0, yeah, this term disappears. Forget about the inequality. Read this as if it's equal. So it will be 80y equals 100. So then y will be 100 divided by 80, which gives me what figure? 1.25, isn't it? 1.25. So are these 2 points? Uongo. This is 1 point, because on a Cartesian plane, whenever you have a point on a Cartesian plane, it will have x and y. X and y. So this is just but 1 point. So I need another point. So what do you think shall I do to be able to get the second point? Talk to me. When y is 0, when y is 0, when y is 0. So for constraint number 1, when y is 0, what will be the value of x? Imagine sio noma. Msishangae sana, sio noma. Usiende kusema leo tumefanya mathematics. Hakuna, bure. So you see, when y is 0, you see this term disappears. This term, so 40x will be equal to 100, meaning that x will be 100 over what here, somebody? 40, which will end up giving us what figure? Yeah, 2.5, eh? So this gives us 2.5. So this gives us 2.5. So now we are through with the first constraint, isn't it? Now, could you kindly go ahead and give me now the second constraint on your own? Second constraints, the 2 points. Second constraint, the 2 points. Second constraint, the 2 points. So now this one, I'll just get points from you. The online students, I can see you are becoming many and many and many. How I wish your AFR class had sent some delegation. I wanted you to move the AFR class from Tuesday, these online guys. If you took it to another time, then you would have fully benefited from these classes, because you're doing them on Mondays and Tuesdays. And they are great classes, trust you me. They're great classes, but now I'm told you guys refused. You refused, you wanted your classes, AFR class, to be on Tuesday. I wish you were able to push the others. Let's take this class to 8 p.m. or whichever day. And then the AA class, now the AA maybe could have yeah, because I'm telling you, if you stick with this class throughout, you can never go wrong. Yeah, I can see Tyne. I can see Susan as well. Great. So they're telling me, but Mwalimu, this is really easy. This is really easy. That when x is 0, the value of y here will be equal to what? Look at this. When x is 0, this disappears, right? So 40y will be equal to 80. So then y alone will be 2. Thank you. And then we ask ourselves the other question. What about when y is 0? So when y is 0, this disappears. So 80x will be equal to 80. So meaning that x alone will be 1. Have you been able to finish for the third one? So for the third one, it's not very hard. Yeah. So for the third one, what do we have there? The third one, you don't struggle a lot there. You can't tell us when x is 0, right? Because you see this one, if you remove the inequality, it is saying 120x equals 60, meaning that x equals to what automatically? 0 point, because there is no y here. So don't bring issues of y, that when y is 0, there's no y there. Here we know that x is 0.5. Do we have to work on the non-negativity? Oh, that's an assumptional constraint. Now from there, you go ahead and draw the graph. So now from there, let's draw our graph. Let's draw our graph. Yeah, let's draw our graph, my good students. So I'm trying to imagine, where do I draw this graph? Not a problem. So I shall just draw it here. Yeah, we shall overcome. Great, great. They already have the points themselves, so I can easily turn my camera far away where I'll be able to draw my graph. Bila wasiwasi, yes. So they already have the points. So in this particular case, ladies and gentlemen, this is what I shall do. This is what I shall do. Bracadabra. You know, there are also some, even if you say that CASNEB is unfair, but also there are funny students. So they get a student who has, in this case here, very good Cartesian plane points, and then they come and write here y, and then they write here what here. Is this normal really? No. We know that always y should be this one, isn't it? Yeah, we shall overcome. So this is y, and this is what here? X. Now, when you look at the x numbers, which one is the very highest? I think it is 2.5. Yeah, 2.5. Kwa hizi zote. So hapa ningekuwa mimi naanza straight away na 0.5. Yeah, 1, 1.5, 2, and then we have 2.5 like that. Yeah, inanga shida. Hata kwa y enda fanya the same, eh? Hata kwa y fanya the same. Sema 0.5, 1, 1.5, 2, sema 2.5. Tumia the same scale. So ladies, I'm addressing you here now. Yeah, we shall not be using, like now this one, you don't have to use like a ruler. We are not doing architectural drawing. Unachora tu haraka haraka. I know you're very neat, lakini unachora hii haraka haraka tunamaliza. Ama lazima tuwe wasafi. Great, great. Great, okay. So have they been able to draw their planes? Yeah. So then let's, in this case here now, map out our points. See how, no, let me give you 1 minute to finish drawing. And then once you finish drawing, write y there. The physical students can write, the physical students can of course shout. They can say, yes, we are done. We are done. Yeah, Stella says, yes. So can I continue? The physical students now, they're not talking to me, but I can see they are okay. So you see, I will come and take the first point. Hapa tusifikirie sana, inakwambia the first point hapa y ni ngapi? And of course, x is 0. So hapo unakuja tunasema y is 1.25. So where is 1.25? It's here. Yeah, this is 1.25. Yeah, you mark it. Y is 1.25. Mark it. Alafu x ni ngapi woye? Ukiangalia x on the other side, there's somebody. This x is 2.5 for line number 1. Don't mix your lines. It is 2.5, isn't it? So for x, you come and do that. And then you can use a ruler. Kama unajua mkono zako zinatingizika sana, then please make use of a ruler. And then you call this one number 1, constraint number 1. Pass the line a little bit there and call it constraint number 1. You call it constraint number 1. Now, remember, ladies and gentlemen, that for us, no, could do it like this. Yeah, you pass this a little bit and then you call it constraint outside. And then once you do that, remember now we must shade the unwanted area. In linear programming, we always shade the unwanted area. If you look at constraint number 1, this is less or equal to constraint. So meaning that the area that we need is the area towards 0, because it is less or equal to. So in this case here, the unwanted ni gani? Somebody the upper side, you shade the unwanted area. Mimi napenda sana mwalimu wangu wa high school, hata kitu kulanga mingi ya university ni high school, because I had a very good teacher. Alikuwa anatuambia, hii kitu ukiangalia na macho ya ndani, hii kitu yenyewe, hii ni utaona mali imeshediwa ni pande gani? Siko na imeshediwa huku juu. Ngoja kidogo. Ikiwa imekaa hivi, inakaa imeshediwa pande gani somebody? Chini. Anasema ukiangalia na macho ya ndani utajua hii iko na more lines pande gani, so una shade part the upper part. So like now this one, you can see in this case here we're supposed to shade the upper part. Ukiona imekaa namna hiyo unajua na shade pande gani? Lower part. It's easier that way. Yeah. Then let's go ahead and draw now line number 2. Line number 2, I can see y is what here, somebody? Y is 2, isn't it? So line number 2, y is 2. Ah, great. Great there. Yeah. And then, of course, x is what here for this line? X is 1. X is 1. So x is 1 here. And then now you go ahead and hold this. Let it pass a little bit. Call it point number 2. Remember, in linear programming, we must always shade the unwanted. So kama hii bila kufikiria wewe, naona hapa shading ziko pande gani? Si ziko juu bado? Shading ziko juu, na shade kwa juu kwa furaha. Na shade namna hii. Na shade namna hiyo. Na shade namna hiyo. Aha. Ladies and gentlemen, the next one nasema namna gani kwamba x equals to who? X equals to 0.5. So x is 0.5, so 0.5 is around here, right? So I don't know whether it is supposed to pass here or you don't mind it's not to scale, eh? I would want to see how yours looks like. How does that 0.5 pass? Even yours are not to scale. Even yours. Is there anybody who is using a mathematical book or a graph paper? Then I will be able to know where it passes. I'll be able to know where mine passes. Now, you see here, is there somebody who can read for me here, down? When you read down here, this intersection, what do we have there? This intersection, and you project it down, what is its x value? 0.8. 0.5 and 1. What I say is 0.5. Not a problem. I can see there is still a problem there. You see, here we have constraint 1 and constraint 2 intersecting. I can easily get these coordinates. I can easily get them because I know it is constraint 1 and constraint 2. So I can go ahead and solve for them simultaneously. If you're not able to read them because you don't have a graph paper, then we shall be able to solve them simultaneously, and then we get to know where do they belong. So if I solve for them simultaneously, I have constraint 1 is 40x plus 80y equals 100. This second one, 40x plus 80y. The second one is 80x plus who? 40y equals 80. So in this case, it will be very easy for me to eliminate y. So what do I do to be able to eliminate y? We multiply equation 2 by 2 to make this 80 and this 80, isn't it? So then if I do that, please listen, don't write this. This is unnecessary. So then we shall have here 40x plus 80y equals 100. This is equation 1. And then equation 2 by 2. So this will be what here, somebody? 160x plus 80y equals 160. So please go ahead and subtract to eliminate. So if I subtract to eliminate, this will be minus 80. Minus 120x, isn't it? This disappears, which will be equal to what here, somebody? Minus 60, eh? So this gives me minus 60. So meaning that x equals what here, somebody? X will be 0.5, isn't it? Meaning that x will be 0.5. So I've known that this, you see there is a line here telling me that x is 0.5. So it means that from here, yeah, in this case here, I should be able to have this line going, and in this case here, touching this exactly. Because we know that this is supposed to be 0.5 down here. And I'm happy because there are students who are able to see that 0.5 from their graphs. Yeah, if you have a graph paper, you don't have to strain. If you have a graph paper, you don't have to strain. All right. So in this case here, come and draw the third one, moving through this. And you can see here, it is supposed to be shaded on the other side. It's supposed to be shaded on this other side like that. Yeah, so please finish drawing yours, something like that. And the moment you finish drawing, say Y for yes, and then I'll be able to advise. There's a tiny strip, very tiny, which is unshaded. Very tiny, which is unshaded. I hope you have it. Very tiny, that is unshaded there. So this tiny unshaded strip is what we call feasible area. So this one is what we call the feasible area. This one here, we call it the feasible area. The unshaded area is the one that contains our solution. It is the practical, the area of practical, the area of possibilities where we can afford. Yeah, and because you don't have a graph paper, how I wish you can even go ahead and give me the value of y here. Because you don't have a graph paper, can you just go ahead and give me the value of y? Perhaps later on you can try doing this on a graph paper and then you see. So we are saying here that our x is minus 60 over minus 120, which is 0.5, isn't it? To get y, so what is the value of y from equation 1? From equation 1. So it will be 40x plus 80y equals 100. And the x is the one that is 0.5. So it will be 40 times 0.5 plus 80y equals 100. So this will be 20 plus 80y equals 100. So meaning that 80y will be equal to 80. How have I gotten 80? The 20 has moved over to the other side and it has become negative. So 100 minus 20 gives me 80. Implying that y equals what here, somebody? Equals 1. Let's just finish that way. And you could see students who have a graph paper like Lincoln, he was able to tell me that this one here, by just reading without doing all that nonsense, they were able to tell us that this is 0.5 versus what? Versus 1. Versus 1. 0.5 versus 1, like that. So then we have our feasible area, which is our practical area. What are we supposed to do as the last step? Once you get this feasible area, please mark all the corners. This will be my first corner A. This will be B. This corner A will be C, because we are using what we call corner point method. Mark all the corners. So corner A, corner B, corner C, corner dog. Mark all of them. That is the last step. That is the last step. So these corners then, what shall we do with these corners, my good students? It's called corner point method. So shall come here and they give us the corners. So corners we have here A, B, C, D. Give us the corners, and then you give us the coordinates X and Y. This is really important for us. Very important. So for each corner, give us the coordinates for each corner. So corner A, is there somebody who is able to see the value of X and Y? 0, 0, right? Corner A, it is 0, 0. Corner A, it is 0, 0. So give me the values of X and Y at corner B now yourselves. Corner B, now you are experts. At corner B, what do we have there at corner B? At corner B. Yeah, please, you shall never fear. Yeah, guessing. You shall never fear telling us your thoughts. Because here, all of us, we are thought leaders. Yeah, so we have in this case here, somebody called 𝐂𝐵 giving me 0 and 1.25. That X, when they are here, X, when you read X from here down, it is 0. And then the Y itself, we had actually written here. Y is 1.25. Thank you very much. Now, can you then pretend that you are reading for C, and then you give me answers? Just pretend. Because your graph can't show very well. C. Your graph can't show very well. I'm so sure if it were not for my workings, you would have really struggled with a C. So what are we getting for C? 0.5 and? 0.5 and 1, isn't it? Because already we did it. 0.5, and then we have 1 there. How about dog? Dog. 0 and 1. Uongo. Dog. What is the value of X here? It is 0.5. And then Y is the one that is 0. So we have 0.5 and then we have 0. So you got brother umeweza catch up. Mbona umekuwa na kashida? Catch up, Great. Great. You shall never fear mwalimu. Mwalimu is your academic father. You shall never fear mwalimu. You shall never fear your father. You can fear your mother, but you shall never fear your father. Never. I'm on the other way around. Great. So then, ladies and gentlemen, what do we do with each of these corners? Now we evaluate our objective function. Remember, our objective function was Z, which was total NPV. Woi nilivuta yangu kitambo. Ilikuwa namna gani Z? ilikuwa namna gani Z? Nilivuta yangu kitambo oye. Z ilikuwa namna gani? 70 point 72.468x, isn't it? Plus 50.944 y, like that. Yeah. So now you get the value of Z for each corner. For each corner. Oh, yote nikuanzishie. Nikija kama hapa nitasema 72.468 times 0 plus 50.944. Y is as well Z. So I know everything here is Pongo 0 for the first point because I'm plugging in. I'm plugging in there. 72.468 times 0 plus 50.944 times 0. So that will give us 0. That will give us 0. So are they able to do the same for corner B now without much hassles? So for corner B, what do we have here? 72.468 times what here, somebody? 0 plus 50.944 times who? Times what? 1.25, isn't it? Please give me a figure there. So according to Lincoln Mwangi, he is getting 63.68. Thank you very much, which has been confirmed by some gentlemen in class here. Thanks, Harriet. Harriet must be a new student here. Welcome. Now we go to corner C. So corner C, what do we have here at corner C? So we have 72.468 times 0.5 plus 50.944 times 1. Times 1. So I'm waiting to hear from you, great students, for C. What do we have there? According to Tyne, it is 87. Thank you. 0.178. Then now we come to D. So D, it will be 72.468 times 0.5 plus 50.944 times 0, which will end up giving us something nice, 36.234. Can we remind ourselves what was our objective in this question? To maximize Z. So we shall go with the maximum Z. So in this question, what is the maximum Z? The highest Z? 87 point. Yeah. So this is the max Z, the one that meets our objective, maximum Z. Yeah, that is the best. Yeah. And therefore, our optimal investment will be XY, and X will be as per corner C. As per corner C. Because corner C now is the one that corresponds to the maximum Z, isn't it? So then this one here will be 0.5, and what here, somebody? 1. Yeah. For corner C, X is 0.5, and Y is what here, somebody? 1. So meaning what? That as per our budget which is available, we shall invest in 50% of X and 100% of what here? Y. Equal to, i.e. invest, yeah, in 50% of X and 100% of Y to maximize your net present value. To maximize your net present value. So then I would want to send you with a special request that later on you ensure that you repeat this question from the beginning to the end when you are alone. Yeah, when you are alone. When you are alone, because it's one of those areas that whenever they bring it in an exam, they really scare AFM students. Yeah. So is that okay? All right. So then I would want you to also get out the AFM paper that was tested last semester. Yeah. Get out the August 2025 paper. I show you something there. Do you have it? You have it in the links, isn't it? Even me, that's what I'm doing. I'm going here searching for CASNEB past papers. past papers. They are good Samaritans. Past papers, 𝐂𝐨𝐮𝐫𝐬𝐿, past papers. All right. Within a minute, you'll be having it. So is there anybody who is able to see a capital rationing question for last semester? For last semester, anybody who is able to see capital rationing question? It came. It came and we waited for it. It came. You know, you must train yourself to start in this case here, knowing exactly areas where these questions are coming from, because in many cases, students will come out of an exam and they tell you, Mwalimu, I don't even understand where those questions were coming from. So you need to start. So this was question number 1. Question number 1. Question number 1B last semester. Question number 1B last semester. Question number 1B. So we start with part B, I know I've done this with some 2 students in here, but they allow me to repeat this. Yeah, so we are told here, Ushindi Limited is considering the following projects. Are we there? So we have projects A, B, C, D, E. Initial outlay has been given, annual revenue, annual fixed costs, and project life has been given. Additional information, variable costs are 40% of annual revenue. So you can see they have given us annual revenue up there on the table and annual fixed cost. So variable costs weren't given. So down there, they have told us how to calculate variable costs. Each project is divisible. Projects D and E are mutually exclusive. Cash flows are confined within the lifetime of each project. Cost of capital is 10%. Ignore taxation and depreciation. The company has a capital limitation of 400 million for investment. All cash flows occur at anniversary what year? Dates. So required optional allocation of the available capital to the projects. That examiner there was wrong. It's supposed to be optimal allocation of the available capital to the projects. So this question, is it very similar to the one that we have done? If you're keen, you realize that here we only have one limitation. Yeah, we only have one constraining amount of how much here somebody 400, given note number 7, isn't it? Remember the one that we have just done using linear programming, we had 3 capital constraints, year 0, year 1, and year 2. So when in this case here you have many capital constraints, you use linear programming. But when you have only one constraining amount, like now this one here, we shall use what we call profitability index. Now that we are bringing this into context, allow ourselves to do this question, Yeah, and you must be able to know to differentiate. When do I use linear programming? And when do I use profitability index? All right. So the first thing that I will do, even if I never understood this question very well, is to ascertain the cash flows. So we do a table for the cash flows. We do a table for the cash flows. So table for the cash flows. What do we have there? Very easy. Your paper is the easiest. AFM. What I know, there are 2 very easy papers. That is AMA and AFM, the easiest papers in CPA, which should never scare you. So we have 3 projects. No, not 3, there are 5. So we have here A, let me size my board. A, B, C, D, E. So we are doing like an income statement that to start with. Yeah. A, B, C, D, E. A, B, C, D, E, like that. So you're doing an income statement. So we start with sales revenue. So sales revenue for A, what am I able to see there? Annual revenue, 200, 300, 200, 300, 300, 180, 170. And then lastly, what do we have there? 80, 80. Now, ladies and gentlemen, you are the ones now who are guiding me I've been able to write the sales revenue. You as an accountant, could you kindly tell me, what do you think will be the next step for us? Go home? No. What do you think will be the next step for us? Yeah, great question there from Lincoln. Yeah, remember linear programming? We use it whenever we have many capital constraints. Like now we had a capital constraint at time 0, another capital constraint coming at time 1, another capital limitation coming at time 2. But you see, for profitability index, we only, as I will be explaining later on, we only have one period capital constraint, only one, like the 400, only one. But that will become clearer as we move on. So Lincoln, just rest with that. But now tell me, after I've been able to write sales here, I want to get my profits. What will be the next thing? We less variable cost. Thank you very much. So come here and less variable cost. I'll write this like that. You guys can write it in full. And the variable cost they have given us, ladies and gentlemen, a criteria for the same. They have told us we use what percentage? 40% of the revenue. 40% of the revenue. We normally feel sad when we go to these exams, get students who don't write anything on their booklet. Yeah, everything is empty, 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 empty. But some of them, in this case here, always remember to tell God to bless the work of their hands. And they have not written anything. Even if this great Lord of ours is very, very marvelous, I mean, try writing something. So less variable cost at 40%. So 40% of 200 gives me what figure? You simply say 0.4. 80. Thank you so much. I hope they're able to follow these online ninjas as well. 40% is cutting across all projects. All projects. So 40% of 300? 120. 1 or 72 here. 68 and then 32. Thank you so much, sister. Anything else that now we need to factor in? Anything else we need to factor in? Because ultimately we want profits. So to get profits, we must less fixed costs as well, isn't it? So come and give us fixed costs. Give us fixed costs. So are you able to see the fixed cost, my friends? Fixed cost, my friends. Oh, I'm alone, but I will overcome. Yeah. So fixed cost column is up there. 50, 100, 60, 80, 20. Thank you so much. Thank you so much. Thank you so much. So we don't have anything much, really. This was a very easy question. So, ladies and gentlemen, come and subtract. And I told you that whatever profit you get here, the very first profit you get will be profit before depreciation and what here, somebody? Tax. The very first profit you get, we shall always call it profit before depreciation and tax. Okay. So the first one will be 200 minus 80 minus 50, isn't it? 70, eh? So the first one here is 70. This is 80. 80, 48, 22, 28, 28. Now, ladies and gentlemen, after we get this profit before depreciation and tax, if we had tax, I would have computed depreciation. But we said in this very class that whenever tax is not provided, depreciation becomes what here? Irrelevant here. So whenever tax is not given, even this depreciation becomes irrelevant. Even in this question, they actually told us to ignore tax and what here depreciation. So, and whenever these two are irrelevant, then whatever you have automatically is the operational cash flow. So this will be your operational cash flow. Is that okay? This will be your operational cash flow. You know, we have two types of, in most cases, there'll be two types of cash flows. We have cash flows coming from our sales revenue during our operations. And then we have sales coming from scrapping our items whenever we sell them at the end of the project life, isn't it? Those are the most common. Yeah, terminal. Thank you very much. So then we shall take a 5 minutes break. Over this break, I expect you guys not to do anything, but just getting to know your neighbor, isn't it? If you are in physical class, just get to know your neighbor. Yeah, relax. When we come back, we should be able to finish the entire question. When I come back, I hope the online ninjas will not be running away, right? Great. So remember, ladies and gentlemen, that these are what here, somebody, they are regular. These are annuities. Where are the annuities? Because you can see evidently, they're giving you the name annual revenue, annual fixed cost. That should be able to tell me that this is a question of annuities. So for A, I can see the number of years are 3, isn't it? Yeah, so then how about the cost of capital? So we have here PV for 10%, 3 years. Is that okay? This will be PV for 10%. How about project B? Number of years are how many? 5, eh? Then we have PV for 10%. How many years for project C? 4. Then we have PV for 10%. How many years for D? 10. Then we have PV for 10%. How many years for project E? 15, eh? 15. So I don't know now whether you have tables you can now use to read. Do we have tables? Do we have annuity tables? So these are some of the small things that students confuse and they give them problems. Remember, I repeat here, if this was year 1, year 2, year 3, year 4, year 5, and then the cash flows are different, then it would have been PV, it would have been irregular. Is that okay? But these are independent projects. So I'm going to use PV because the sales is annual, fixed costs are annual, so these are annuities. All right. So then if you don't have a formula sheet, yet I would want you to go there and punch like this. So remember the formula of PV. So PV normally is 1 minus 1 plus R, eh? Everything divided by what here, somebody? R, yes. So like now I know R is 10%. So like now here I will be talking of 1 minus 1.1 raised to, the first one is 3, eh? Divided by R, which is 0.1. So in your calculator, you say 1 minus 1.1 raised to negative 3. Whatever answer we get, after we say equals, we say divided by 0.1, and then you give me an answer. Please give me the answer for A. Why they're not giving me an answer? If I were them, I would take my calculator, say 1 minus 1.1 raised to negative 3. So according to Lincoln, he's getting 2.48. Yeah, 2.4869. Please, everybody be very aggressive. I want us to pass this paper one term. So like now here, remember 10% is constant, eh? So now the number of years are how many? 5. So let's say 1 minus 1.1 raised to minus 5 equals, whatever answer I get, I say divided by 0.1. So from Marvin, we are getting that 379.08. 379.08 decimal. Then we go to the third one. The third one, just like that, slowly. There's no hurry in Africa. There's no hurry in Africa. So now here we are talking of 4 years, eh? So I'm waiting to hear from a ninja. 4 years, so you say 1 minus 1.1 raised to minus 4 equals whatever we get, we say divided by 0.1. We divide by 0.1. What figure are we getting? Somebody there? Abracadabra, what figure are we getting there, somebody? 3.169. 3.16. 3.16. 3.170. Online ninjas wamenyamaza, hii imeolemea. How about in this case here? For E, I'm being told it's 7.6061. E, 6061. How about D? D for dog. 6.1. 6.1. 446, like that. So, ladies and gentlemen, if I've been able to convince you that these are annuities, that you have accepted annuities, and they've been able to get this PV fast, present value interest factor of an annuity, I'm so happy. So the next thing then will be for us to multiply the cash flows with these numbers, isn't it? Multiply cash flows with these numbers. Yeah, C, they're saying that C is supposed to be 3.1699. They've refused to the 3.170. 4 decimal places. Is it 1699? Yeah, if it's 4 decimal places, let's put 4 decimal places. 3.1699. Ah, great. 199. Great. So because my space is not enough, you will have to allow Mwalimu to rub this, and then we continue with the journey. Let me rub this, and then we continue with the journey. So remember, already we have our cash flows. Already we have our cash flows. So our cash flows here are 70, 80, 48, 22, 28, like that. And then we have, in this case here, our PV first. We have our PV first, which is 2.4869, 3.79, 68. We have 3.1699. We have 6.1446. We have 7.60, 61. So please go ahead and give us the present values. Go ahead and give us the present values. Present values. Present values. The PVs. So PVs, what are we doing? We're taking these numbers times this. We multiply them, isn't it? Yeah. So then can you kindly give me the first one? $174.083. The online ninjas are no longer talking to me now. Yeah, thank you very much. And then B from Kelby, we have 303. 303.264. Go to C. Thank you so much, Kelby. What do you have for C? 152.1. 52, eh? Yeah. Thank you so much. Then we have D. Mm-hmm. 212.97. And then the last one, which is E, 28 times 7.6061. Ya mwisho, eh? No problem, yeah. Okay, D. 135.18. 12. And then the last one is 212.9708, isn't it? Now remember, this is a one constraint question. And a one constraint question, we shall always evaluate the viability of projects, not using linear programming, but using what we call profitability index. So once you have gotten this, then we shall be able to come and calculate what we call profitability index. Profitability index. And how do we get it? We take PV over initial outlay. You take the PV which you have there over the initial outlay. You take present value over the initial outlay. So the present value, like for A, is 174.083, right? What is the initial outlay? Initial outlay is given in the question, right? 100, eh? So let me just share my paper here just in case somebody has not been able to pick it. So the initial outlay is given here for A. It's 100, isn't it? So 100. 100. Yeah. This one here, bit will be 303.264 divided by the initial outlay for boy, which is 300. No. Yeah, it's 300, isn't it? 300. And then we have 152.1552. Divide this by what year? 150, eh? Yeah. And then dog, what do we have there for dog? We have 135.1812 divided by initial outlay for dog is 120. Yeah. And then lastly, we have 212.9708. We divide this E by 180. Yeah. So what are we getting? We are getting profitability index, which is normally used to evaluate the viability of projects in a situation where we have one constraining factor. Like here, the constraint was availability of 400 million only. Yeah, if it was 400 one year, another year 250, then if the constraining factors are many, we shall use linear programming. So please give me more decimal places here. What do we have here? Somebody has PI? Please talk to me. The online guys are able to talk to me. 1.7408, isn't it? 4 decimal places. 4 decimal places. I'm waiting to hear from you now, great students of mine. 1.0109. Thank you. Thank you, Anna. So now we are on Carl. So Carl 1.0. 144. 1.0. 1.0144. Okay, thank you so much. How about dog? 1.0. Sorry, dog. 1 point. Dog 1.1. 265. And then the last one now is egg E. 1.1. 832. Now remember, the higher the profitability index, the better a project is. Normally we choose projects with the highest profitability index and give them rank 1. So remember, the basis of getting this profitability index is to rank your projects. So in this case here, let's rank these projects. Let's rank the projects. Which one takes number 1, given that it is the one that has the highest profitability index? A. So A is number 1. A is number 1. So this rank. So A takes up number 1. Number 2, 1.12, 1.18. See the E? Yeah. So E takes up number 2 because 1.18 is higher than 1.12. After that, we are ranking them. D O Wongo. D Wongo. Wongo. Because you see, there is not number 3, which tells us that D and E are mutually exclusive. You can't invest in both of them at the same time. This examiner hakutaki mazuri. Anajua unaweza ukafika hapa analeta confusion to read note 3. Read note 3. So the moment you're saying that E has been ranked, it means that D will never be ranked. D cannot be ranked because the two of them are just like the two sides of a coin. If you are to throw a coin up, alafu upate both tails and heads zimekuja up hivi, toroka hiyo ni mashetani. Because they're supposed to be mutually exclusive. When one occurs, the other one cannot occur at the same time. So again here, D and the E cannot occur at the same time. If you have ranked E, meaning that E will be one of the investment projects, D cannot occur. So we strike that off. So after that, then the third one will be 1.01, 1.0. Yeah, this one here, isn't it? So this becomes number 3. This becomes number what here, somebody? Number 4. This becomes number 4. Yeah. So then, ladies and gentlemen, after that, what do we do? Now let's prepare. Uko na marks mingi sana. By the time unafika hapa tukikosea, that is now, yeah. PVFA ndio ilifanya nikapata fail. Purity, forget about that. We shall overcome. Forget about fails. All of us are winners. I mean, with just lessons learned, isn't it? Yeah. So in this case here, go ahead and now give us the optimal investment schedule. Yeah. So now give us the optimal investment schedule. So optimal investment schedule. So then we have our projects. So our projects, ladies and gentlemen, which projects do we have here? Remember now you give us projects as per how they've been ranked. So A was ranked number 1, isn't it? Yeah, from there we have D, E. From there we have C. From there we have B, B for boy, like that. B for boy. So is there somebody who is able to remember the initial outlays? Initial outlay? Initial outlay ni ngapi ya A? Oh yeah. 100. Ndio hizi hapa initial outlay. Zilikuwa mahali hapo ya. Alafu ya E ni ngapi somebody? 180. Alafu ya C ni ngapi? 150. Alafu ya boy ni ngapi? 300. Now please copy up to there fast. So remember the amount which is available is how much? 400, isn't it? So come and add here. Tell us the total required. Total required. Total amount required. Add all of them. Total amount required. Add all of them. 100 plus 180 plus 150 plus 300. 730, yeah? 730. How much do we have which is available? Available is 400, isn't it? So then come here and give us the deficit. Deficit, subtract. Itakaa kama AMA, yes. So subtract nakuja ngapi sample deficit? 330. So this deficit is what we recover upwards. You recover upwards. You recover upwards. Yeah, you recover upwards. So just like, for example, how you can go to a supermarket, you've been able to line there, unfortunately, even with your children, you've done very serious shopping there, umefika kwa ule msichana pale teller, anakuambia sasa leta vitu tupiga kwa machine. Anapiga, realize unahitaji 80,000. Na kwa mfuko kuna 50,000. What should you do? Hiyo time watu wamepanga queue kutoka hapa mpaka Timbuktu. Uwezo kuanza kupiga simu ati sijui nitumie pesa tena. The very best is to return some things, isn't it? Sasa watu wanalia kwanza mtoa 3 years. Mrudisha kitu ambacho anapenda zaidi. Aibu. So in this case unarudisha kitu ambao ni irrelevant, ile ambayo iko least like. So like in this, that's why we are, so like now we know that this 330 will be recovered backwards, upwards. Because you see this is the least liked. This is the highest in terms of our priority. So it means that we are recovering this 330 upwards. So what I will do, I will recover the whole of this 300. Isn't it? So we recover the whole of this 300. Yeah. After recovering the whole of 300 from there, we still have some balance and recovered. What is that balance? 30. So you go up and subtract 30 here. So that in total you have recovered 330. So meaning that I will not invest in project boy. C, I will invest how much in C? 120. I'll invest 120 in C. Yeah. So this is really, really great. We are making very, very good moves. If you see this project here, they are telling you, if you look at the question, look at the question. This is a great question. This is a great question. So optimal allocation of the available capital to the projects. So this is the optimal allocation. We have allocated 100 to A. E, we have allocated how much? And how much to C? When you add this 120, 180, and will you get 400? Yes. So you've been able to do the optimal allocations. Look at the next question. They want us to give them the net present value for the projects now you have invested in. So maximum resultant net present value from the optimal allocation. Not a problem. Not a problem. Not a problem. This I'll be able to get very well. So what I will do, using this table, ladies and gentlemen, I have the present values. Do you remember the present values? Present value for A ilikuwa ngapi? Present value for A ilikuwa 174, eh? 174.083. How about present value for E? Present value for E ilikuwa ngapi, somebody? 212, eh? 0.97, eh? Yeah, 08. How about present value ya C? 152, eh? 152.155, eh? Yeah, whatever, 2. Haya. Sasa naomba unisikize kwa makini sana. Naomba unisikize kwa makini sana. Naomba unisikize kwa makini sana. Ukielewa tu hii sasa ni hivyo. You can even come and change the type of your table. So the type of your table, you have 3 key projects, A, E, and C. So we have their present values. Their present value for A, it was 174.083. For E, it is 212.9708. For C, the present value is what here? Somebody 152.1552. So again, remind me they are original. Remember, these are original initial outlays. Original initial outlays. Remind me they are original initial outlays. All of them. The original initial outlays, this was 100, this was 180, and this was 150. Original. So from there, ladies and gentlemen, please don't put boy, because boy, there's no investment at all. Boy, there's no investment at all. So come and give me their net present values. 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 So this one here will be 174.083 minus 100, isn't it? Which gives me 74.083. Oi, niko peke yangu. Niko peke yangu. Niko peke yangu kusema ukweli. Uzuri class la karibu ishe. Yeah, we shall overcome. So E to 12.9708 minus 180, what are we getting? 32.9708. Alafu tuko na 152.1552 minus 150, giving us 2.1552. Now, nisikizeni vizuri. This NPV, I'm going to eat the whole of this A. Sina invest all the money. That's what we are good. I'm not deducting anything. Yeah. Nikija hii pia everything. Lakini nikija hii, this must be time apportioned. I would have gotten this NPV if I invested how much? But how much have I invested in this? 200 uongo. To invest how much in C? Yeah, if you remember, we recovered 30. So times 120 over 150. So this one here has to be prorated because you never invested everything. Yeah, the project is divisible. The project is divisible. The project is divisible. The project is divisible. So in this case here, therefore, the total NPV, because we'll be asked to give us the total NPV. This one I'm not apportioning at all. I never recovered any money from their initial investments. I'm not recovering anything from this. But this one, out of 150, I took away 30 because I could not afford. So in this case here, we have times 120 over 150. So then come and using a stroke of your pen or rather of your calculator, just give me the resultant net present value. The resultant net present value at the end of the day will be equal to what? At the end of the day, the total net present value will be equal to what? Yeah, ask a question, please. Somebody's getting 𝐂𝐵 108 point. 108 point. Ah, great. Yeah. Great. So that is what you needed to have done to get how many marks? So many marks. So many marks. Remember again in AFM, I'm not selling perfectionism to you. Never try to be perfect because you not finish your exam. You won't finish your exam. It's about getting great key ideas and how to get started, and you'll be able to pass. Yeah, more practice is needed, Mercy. More practice is needed. More practice is needed. Lincoln, remember, is not about getting full marks. Honestly speaking, Lincoln, remember, even some of you, some papers in the past, you may have done FR, FM. Yeah. And then you thought for sure that this paper, I failed. Yeah. After just exams, you see this paper was very hard. You think you're failed. But when exams come out, you've passed. Yeah. It happens, many papers. So it's about your confidence. It's about you getting to know how do you get started. And then you take advantage of what? Yeah, the theories. You take advantage of the theories. So then I'll be able to give you 2 questions. These are continuous assessment tests. I don't call them homeworks. I call them continuous assessment tests, which you must attempt before you come tomorrow. Should I give you 1 or 2? You guys are busy. Let me just give you 1, isn't it? You guys are busy, yeah. Only 1. December 2022, question number 1. Not 2, no. December 2022, question number 1. December 2022, question number 1. And then I'm looking at question number 1B. Management of College Publishers Limited. Question number 1B. So this one, you don't have to get like everything, but just attempt. I would want to see how you would have begun. Actually, you can attempt it briefly here. Let me just give you some hint. Let me give you some hint there. So remember, kama utakuwa umefanya homework na kutuma nyumbani ulete mzazi. Niongee na mzazi, atasikia raha. Mwambie msichana wako huyu sasa hafanyi msichana wako sasa hafanyi homework. Atafurahi sana. Tumpatie gift. Sawa. So ukiangalia vizuri, sijui kama nimeandika vizuri, wameiona December, acha niandike hapa chini. Please usikose kufanya December 2022 question number 1B. Ukiangalia pale amekuambia the management of College Publishers Limited has estimated the following initial cash outlays and net cash flows and probabilities for a new printing process in each case. Yeah, wametupatia worst, most probable, best case. So wamekwambia year 0 is the initial cost of the new printing process. Years 1 to 5 are the operating net cash flows, and year 5 is the estimated salvage value. The firm's cost of capital is 13%. So assuming that the above projects are an average risk, compute the expected net present value of the project. Can I do one for you? Because there are 3 projects.